Welcome to the Weekly Juice Podcast, where we discuss all things real estate, personal finance, investing, entrepreneurship, and the many ways to achieve financial independence. We interview accomplished investors and entrepreneurs with the goal that their stories inspire you to take control of your financial future. Here to get your creative juices flowing while also documenting their own personal investing journeys are your hosts, Corey Jacobson and Ryan Bevilacqua.
Welcome back to the Weekly Juice. As always, it's your boys Ryan and Corey here with another episode for you. Today we interview John Bianchi. He is the head of data at Techvestor, and he specializes in teaching people how to increase your ranking on Airbnb and maximizing your revenue through a bunch of different data tools, and essentially helps drive dollars or figure out the properties within a market that are going to see the highest revenue potential earnings.
John is like the data guy. Like he drove us through a bunch of different markets and the whole reason why some are successful versus others. He has Airbnb profit maps that based on where you have properties, what amenities you definitely need to have that will increase revenue. And like he also has all these products and services that you can buy. Like
you can find those products by clicking the link in our bio. And he basically has an arsenal of not only YouTube videos, courses, but also products that will help you identify markets that are going to be profitable to buy an Airbnb in. And then also within those markets, the exact properties that should see the highest revenue earnings. And then also drilling it down even further, which amenities specifically you should add to those properties to be the highest competitor in those markets. So we've talked a number of
3 layers, right?
Yeah.
More.
This is an onion, dude.
Yeah.
There's multiple layers here.
Yeah, seriously.
There is.
And he has, not to cut you off there, but he has like, okay, what's going to work in Scottsdale? What's going to work in the Poconos? What's going to work in Tampa? What's going to work in Texas, in Waco? So that's a lot of what he went through in the episode of like, there's little things like he compared 2 side-by-side properties on his Instagram, and one was doing like 80% more revenue based on something very, very slight, like a photo change or like the angle or one amenity. So he kind of blew our minds today. I'm going to highly recommend using his products to people that are listening to the show. I know we're going to use them ourselves because we're managing over 100 properties and we want to make sure that we're driving the highest revenue out of all of them for our owners.
Yeah, I think it was the reason we brought him on the show today was because we've talked a lot about the marketing aspect of photos, writing the proper listing, email marketing, and communication with tenants, right? But it really comes down to you make your money originally, or this is like like 101 real estate. You make your money when you buy the right deal, right? So you want to make sure you're buying in the right market, buying the right property. And then the only way to really check that is to go by the data. And John's an expert at that. He does this on his W-2 job, but he also does this as a consultant on the side. So he's the go-to guy. You heard us. We had an amazing episode with Mark from Boostly. I kind of see these kind of working in tandem. So if you're looking for how to analyze deals, like this is where you should start there. As I mentioned, John has an arsenal, like a collection of all these different products and educational pieces that you can use. So click the link in our bio. We're going to make sure to have that in there so you can click on there and go through everything that John has. And hopefully it's valuable to you. We're going to add him into our mix up as Corey mentioned, in the Poconos. We're managing over 100 units up there. And we have one specifically for our own too. John has two different product offerings. You send him your property for $500 and he'll analyze and be like, dude, you need to put XYZ in this property. You can change the design. We're excited for that one. But then also the market as a whole, like for example, the Poconos, and I'm getting deep here, but the Poconos has a lot of different, I call them submarkets, but there's HOAs where some are like regulations are stricter. And that's one specific market. He'll analyze any market that you can potentially come up with. And he said also in 2 weeks, he has this one product kind of going to hone in and it's going to be like a fine tooth comb where you can pick any market in the States and it'll drill down and show you all the competition and weed out the bad data so you don't have to do the scrubbing on your own. So all in all, incredible episode. John was a breath of fresh air, and we needed a data guy like this, and it was exciting to have him on.
John's the real deal. Let's bring him in.
Let's do it.
For real estate investors, going mobile is the next big thing for managing our properties. We like to have the power and resources in the palm of our hand. When we're hunting for deals, we're consistently go, go, go. Having RentReady's property management app is great for checking in on all our properties, especially when it's time to collect rent. With RentReady, we get the benefit of both mobile and web apps that allow us to collect rent from anywhere. We not only get instant notifications when rent is paid, but we also have the ability to send automatic reminders to tenants when rent is due or late. From finding the perfect tenant to collecting rent, everything an investor needs to build wealth and manage their investing portfolio can now be found under one roof with RentReady. The most exciting news is that RentReady gave us an exclusive 50% off promo code that can now be used by all of our Weekly Juice listeners. You just need to visit rentready.com and enter the code JUICEPOD to get 50% off any RentReady plan. That is RentReady.com and enter the code JUICEPOD, JUICEPOD, to receive 50% off any RentReady plan.
John, officially welcome to the Weekly Juice Podcast. Corey and I are so excited to have you on the show. As I mentioned to pre-recording, we've done a lot of research on you and know that you are the go-to data guy for short-term rentals and Airbnbs. So we're very excited to have you on the show to drop some knowledge on our listeners.
Yeah, I appreciate you having me, guys. I'm genuinely looking forward to this one.
Cool, man. Yeah, we're excited. So I think it's probably best to start off talking about your background a little bit. What do you do day to day? And then what do you have on the side that kind of, makes you our guy to go to for data?
Sure. Perfect. So I am the head of data for Techvestor, and Techvestor is one of the largest short-term rental investment funds in America. We've raised like 50 million-ish in the past 18 months and bought over 100 properties. And it's been my job on a daily basis to identify what are the best markets for us to be entering into, what is the absolute best thing we can purchase within that market, and how do we maximize the revenue of that property. And so that's what I do all day, every day. But I've also had an Airbnb data consulting business for about 2 years now, where I help other people find profitable short-term rentals. I teach them my process. I've got 3 free courses on YouTube that help people understand the data. I've got a couple of products and services through my firm that help people do that as well. So that's all I do. I live and breathe Airbnb data, and I love it, to be honest. So it's awesome.
John, what about your background drove you to that area of expertise? Like, what did you grow up being into mathematics? Like, what was it about how your upbringing, anything really?
Yeah. So honestly, I don't really know. So I did television broadcasting in high school. I did a year of television broadcasting in college, and then I dropped out. I knew I wanted to get into business. I became a financial advisor because it was one of these businesses that you could start without any capital. And I did that till I was 24, managed $10 million, had my own assistant, office, business partner, all that stuff. And I hated the day-to-day. And so I was actively looking for something else I could do. And then I found short-term rentals, found Airbnb, opened up a couple of them. And I think what really kicked it for me was that I needed to prove to my investors that if they gave me money, I could get the return that I was promising them, right? And I had learned about AirDNA at the time, which is like the number one Airbnb platform for data, Airbnb data, right? And I learned how to use it. And so I started to just keep getting deeper and deeper to understanding it so that I could reassure my investors that the money was going to be well spent, right? And I think as I started to do that, I realized I was good at it. And I realized that I was starting to understand it in a really deep way. And I just had a lot of energy towards it. You know what I mean? People say find something that you just can do for hours and then hours and hours. And that was just one thing that I just could constantly review over and over again.
Very cool. Very cool. So we have a lot of listeners that are intrigued or interested in purchasing an Airbnb. They're looking for the type of property, the market. There's a lot that goes into it, right? For starters. So can you take us to the basics, right? Someone that's just starting off, how can they go about kind of crunching the data and finding a market to dive into? And then, we'll take it the next step within that market. How can they drill down and find a property that will drive the most revenue?
Okay. So I'm going to be focusing on people who are buying properties rather than renting properties. Just for the most part, right? Renting, if you're doing rental arbitrage, it's fairly the same idea, but we're going to focus on the arbitrage, on the purchasing. Cool. So what we look for is the 20% rule within Techvestor. We're trying to find homes that meet the 20% rule, which is a price to rent ratio. So if the home cost us $500,000, it needs to make at least $100,000 a year, right? And the reason that we use this ratio to look into markets is because we know that if a home meets the 20% rule, then it likely will cash flow, right? At some sort of level, it will cash flow, right? Now, obviously, if we can get to 23%, we're probably buying it on the spot, depending on the market that we're looking into. But we've just found that by searching first for just places that meet the 20% rule is the quickest way to sort of veto a market or keep a market, okay? Since January, I had to figure out where we could put about $100 million, and I had to find new markets. And so I've gone through probably, it was 288 the last time I checked, but it's probably over 300 different markets since January to try to find ones, right? And vast majority of them, I have not decided to move forward with, right? As an example, Techvestor right now is only in 4 markets for its second fund, for its year 2 fund. And so out of, right, like over 300. So the way you would need to do this, right, is you have to be able to understand how much homes are making within the market on a revenue basis, right? So you can use tools like my tool, which is a profit map. You can use tools like STR Insight or AirDNA. But what you need to do is be able to identify how much does a 4-bedroom make in X market, right? And then what you want to, once you believe that that sized home can make, let's say, $100,000, you then have to go into Zillow and confirm that the properties on Zillow are at that 20% rule, right? So that you can buy properties that meet the 20% rule within that market that look like the homes that are making $100,000. Does that make sense? Right?
Yeah, definitely. I'm curious about that though, and that because I've heard the 20% rule, we've used it. I think it's a great rule. I'm wondering, like, the AirDNA, whenever I've looked at data, it's kind of, to me, maybe I'm not looking at it the right way. Like, it seems like it's skewed, and I'll give an example. Like, if I look at a 4-bed, 4-bath, which is a rare find, the difference between that and a 4-bed, 3-bath is like astounding in a lot of markets. And I'm wondering, does that make that much of a difference to have that extra bathroom? Or is there just some sort of like automatic input of data that fuels a higher revenue? Like, how does that work?
Yeah, so it's funny you asked that about the bathrooms, like right off the bat, because I actually used to be huge on bedrooms and bathrooms. Like that was because I had noticed in the data, the way that it would vet it, that you could very clearly see a difference that's an extra bathroom would make more money in Chicago. Okay, it's like the market that I like really started off in. But over time, as I've been doing this more and more and more, I've realized it's really not that big of a revenue driver. Having an additional bathroom really isn't. What's probably happening when the difference between a 4.4 and a 4.3 is that homes that are 4.4s are usually luxury properties, right? When the bedrooms match the bathrooms, they're way higher quality, way nicer. And you can, like, a 4.3 can be, 4.3 and 4.2 are almost the same most of the time, right? So what tends to be happening is just that the one with more bathrooms is just a higher end luxury property, therefore it makes more money for that reason. It was kind of a stupid thing that I used to talk about where I was like, hey, in downtown Chicago, a 2-bedroom, 2-bath makes $20,000 more. And that's true, right? It is true. But the reason it makes $20,000 more is because it's a new build with a new kitchen, with better views, with a better apartment. And so naturally it's going to make more money. So it's not really because of the bathroom. It's because of all of those things, right? So anyways, that's what's happening with the data on AirDNA. Now, one additional thing on that is you're saying a lot of the data on AirDNA kind of looks skewed. You have to know that most of the data that you are seeing on AirDNA or any other provider out there, most of it, about 80 to 90%, is useless data. It is data that is not giving you true annual revenue numbers. The data has only been tracked for a portion of the year. There's a bunch of, it could be inaccurate data. The algorithm is picking it up incorrectly. I've got like a 26-minute video on YouTube explaining all the different ways that Airbnb data can go wrong. And so I strongly recommend anyone to watch that to truly understand it. That way you're only looking at the good data. And then with that good data, that's when you can actually make an actual decision based off of that.
Can you talk to us about how someone would find, like, not trying to get the spark notes on the 26-minute video, but just within the confines of this episode, what can people do to kind of weed out some of that bad data? So they're like, okay, strictly, I know I'm not getting duped here, right? And I'm going to buy a property that looks like it's good, but it's actually not great. Yeah. And then, talk to us about some of the tools within the AirDNA. I know a lot of people, we've heard about that, Price Labs, there's a couple other ones, and I know they're not all exactly the same, but those are the two we hear a lot about, how people kind of try to drill down their data and figure out how much their property is going to make. Can you chat about those and maybe walk us through a couple different points where someone could follow along if they want and look through the AirDNA?
Yeah, definitely. So I'll start off with the bad data, then I'll get into how to use some of the different tools out there. And it's funny because literally every single podcast that I think I've ever been on, I've talked about good data and bad data and how to navigate it, because it's like the most important thing. It actually drives me insane that these platforms actually show the bad data, because they don't need to. They could just remove it, but it would look like there's a lot less going on. And so they keep it. Which, anyways, that's a whole other thing that I can get into. But
no, it's good to bring up. That's important.
Yeah. So good data, right? What is good data? Good data is when you have a listing that has been tracked for over 250 days by the provider, right? Whether that be AirDNA, Price Labs, any of these guys, and you have a full-time host. So you have somebody who's a full-time active host, because there's tons of people who are not full-time active hosts, right? So you need it when you can get that combination of those two, that's where when you get good data. So the first part being tracked. All of these software providers, data providers, use algorithms to get that data. And their algorithm goes into the calendar of the Airbnb and it records the calendar, right? On a daily basis, and it does this every single day. So it'll go into your calendar one day and it'll see that it's available and it's available for $100. It then comes back the next day, sees that it's blocked off and assumes that you made $100 and it records that. Now, the algorithms can't look backwards because Airbnb doesn't show backwards data, right? It only shows forwards data, which means it can only track it on a day-by-day process. So the reason it's got to be tracked for over 250 days is because that almost gives us a full year and it's gone through most of the seasons, right? And we can kind of figure out those last little 3 months. But if it's only been tracked for 30 days, you can't just take those 30 days and times it by 12 because that might be a peak season or slow season that it went through, right? And so you want it to be tracked for over 250 days. Then, and by the way, it'll show up on all the different providers. It'll say days available usually, or days tracked, like you'll see it, right? And then the other thing that you need is that it needs to be a full-time host. Well, the way to check and confirm that's a full-time host is that it's been getting reviews every single month for the past 365 days or however long it's been tracked. You want to see at least 1, 2, 3 reviews every single month for that time frame, and that's how you know they've been a full active host, because that's just how Airbnb works. The only time it's okay to not have a review is during a slow season. That makes sense. So if you have those two things, tracked and full-time host, you got good data.
Cool. So let's talk about AirDNA itself, right? For us, that's when we originally, like before we hired a property manager and we were trying to identify, we also had an agent helping us find the specific property. But for us, we were trying to go through, right, and figure out how the hell is this property going to fit within our buy box? Is it going to be profitable? And this is like further from the market. We found our market, right? And we're just trying to hone in on a property at this point. Maybe you can talk to the different tools that AirDNA offers. And then also maybe, I know you mentioned that you have a product as well. I'd love to hear the differences between the two. And like what, I assume your program has good data, which is great.
Yeah. Well, only good data actually. But so mine is I remove 80 to 90% of the bad data and there's only a little bit left that you got to navigate through. But anyways, so I'll explain the two. So the way to use AirDNA and sort of the couple of different ways to use it, right? So the way that I use it quickly, let's put it that way. If you want to really quickly like analyze a market, is that you can go to this, there's a little option they have there called top properties. Now, if you just click top properties, it's kind of useless, especially if there's 10,000 Airbnbs in your market and then you click top properties and it only shows you the top 12. You can't really make any decisions using that, right? But what I like to do is I like to narrow it down. It gives you sort of filter options. So you can narrow it down to 4 bedrooms. And so now you're just looking at the top 4 bedrooms. And then you can narrow it down again and say that only the 4 bedrooms that sleep 10 people. And then what you're looking at are the top 12 best 4 bedrooms within that area. Usually, let's say Tampa, there's probably only like 300 to 500 4 bedrooms within all of Tampa, if that, right? So now you just have the top 12 of those, which tends to be like the best of the best, cream of the crop. And it's useful to just get an understanding of those top 12. Are they making a good amount of money, right? That's kind of a like, what you don't want to see is the first one making $200,000 and the 12th one making $75,000, because that's a huge drop off, because that you're only looking at the top 12. So there's a whole bunch underneath that are barely making anything, right? Now you are saying that's a quick way to know if you're in a market already, or sorry, if you haven't confirmed that that's the market that you want to go into. But if you have confirmed, like, yes, this is the market that I want to go into, how do I use AirDNA to make the decision, right? What you're doing is you manually extract the data. You manually pull it out. It's the only way that I know to get to a true right answer, which means that say you want to look at 4 bedrooms in Tampa, then there's a filter option on the map that will let you look at only the 4 bedrooms within Tampa. And then what you do is you hover over each one of those little dots on the map, and then you confirm that it's good data. You check to see that it has over 250 days available, which is days tracked, and that it has over 20 reviews. If you can see those two things, it tends to be good data about 90% of the time. And so what you would do is you would literally click that, and gather all the information that it's providing you there. It's giving you the average daily rate. It's giving you the occupancy. It's giving you the revenue. It's telling you how many days it's been tracked. You can open up the link and you can take a look at the numbers of bedrooms, bathrooms, all that, plug that into a spreadsheet and just keep doing that and keep pulling it out and putting it into a spreadsheet one by one by one. The reason you want to do this is because if you just hover over all those little dots and kind of open it up, you're going to miss so many things. You're going to forget think about it. Imagine if you do it over 20 different properties. Can you remember the annual revenue of all 20 different properties, let alone the occupancy and the average daily rate and all the little nuances, if this one has a hot tub or if this one has a pool and if this one has a little putting green? Like, there's so many different little things, right? So by pulling out all that data and manually scraping it onto a spreadsheet, you can organize it from who's making the most to who's making the least. And then you can go through each one of those listings one by one, and you can understand why the guys at the top are beating the guys at the bottom and what exactly that they're doing that's allowing them to make that amount of money.
So this is funny. This is maybe 2 years ago. We were debating going into the Orlando market, and I specifically watched a video that you had, and I went through and did this, dude, and went through the spreadsheet.
No.
I swear to God, dude. And I was like, this is brutal. I hate this. It's taking me so freaking long to figure this out. But then, not a massive spreadsheet guy. I know a lot of people out there are. I'm not one for the numbers, but to put it out sheet by sheet and go through, and I'm like, I still couldn't figure out. Some of the data looked good, some still looked a little skewed, and then trying to find the occupancy rate and all that stuff to drill down and identify a property. Is there a way outside of manual like that to trust us? Everyone is a little bit lazier than wanting to do that. You're really good with the numbers and spreadsheets. There's a lot of people out there that really want to get into this, but they're like, hey, dude, that's going to take me absolutely forever. And then not only finding the top tier properties, then going to try to find one that's available for them to buy and going back and cross-referencing and trying to find the amenities. There's just so much to it, right? Is there a quicker way that you would recommend people get to the end goal?
Also, my product that I created is what saves you all of the time around that.
I did not do that on purpose, by the way. That's unbelievable. Let's go. Okay.
Yeah, that was beautiful. So literally the product that I created is it manually doesn't scrape from AirDNA. I have my own provider. So I pull from this master sheet. So if you wanted all of Orlando data, you literally click a button you type in Orlando, you click it, and then it pops out with all that raw data, all that raw information, cleaned up, organized, and sorted in a way that you can really easily navigate it, right? And then then all you're doing is you're clicking the 4 bedrooms within a certain zip code in Orlando, and you're reviewing them to try and understand, why are some people at the top doing really well and why are the people at the bottom doing really bad? So you can instantly have it.
So a couple of things here, and I'm just thinking out loud. We have, as I mentioned to you before we started recording, we have about 100 properties under managed up in the Poconos, right? And there's so many different sub-markets of the Poconos I'm thinking about, and the HOAs, townships, I'm sorry. And so for me, I'm thinking, if we came to you and we said, hey, listen, I give you our property, for example, right? You could go through them. I assume you could say, hey, this is what you guys potentially could source for revenue if you add XYZ, right? But what's this, another option?
Literally the newest option and newest service that my company provides is exactly what you just said, where you're about to buy a property, you have a property under contract, you want to move forward with it, but you're not 100% certain on that number, and you're not the expert at doing this either. So you're somewhat uncertain. You come to my company and say, hey, this is a property I have. How much do you think this is going to make? And what do I need to do to be able to hit that number? We can pull all the data, make sense of it, and tell you, this property you're going to buy, it's going to make $100,000, but you need to add an additional bedroom. You need to have a hot tub. You need to have a fire pit. And you've got to match this design of this other listing over here if you want to hit that $100,000. And so, yeah, that's a service that we literally just launched as of a month and a half ago.
That's invaluable, to be honest. For us who we have a hand in 100 units, right, in the Poconos, and as I mentioned, a lot of different HOAs, but they're all within that same experience, that mountain experience, right? We could talk about different bedrooms and things, but we found over time that the amenities really helped drive the dollar up, and that was hot tub, fire pit, exactly what you mentioned. Sometimes a movie theater room. There's a lot of I don't know about putting greens up there, but I would maybe we'll offline about this all, because that could really help us drive our entire portfolio up for different they're different properties or different styles, right? But they're all kind of within that similar market, if you will. So
yeah, I mean, the Poconos is Poconos is one of the most confusing markets there is, without a doubt, because it's a 2-hour driving radius, right? But all of the homes do very similar, and it's all considered the Poconos. And there's so many. It's the most confusing because of the regulations. But if you can figure out the regulations, then you're kind of good to go. But yeah, the amenities are everything. The amenities, the design, the way you put things together. Like Kenny Benwell and I, the owner of STR Insights, we put on a 8-hour event this Saturday, the Saturday that just passed, all about understanding how to maximize your revenue. And a good two hours of that was all about amenities and understanding how to understand what amenities you absolutely need and which ones are a competitive advantage, right?
Yeah. Well, I was going to say, not to cut you off, a couple things here before we keep going on here. Like, one, I'll have to get that link from you and I'll put it in the show notes for people to watch, because I'm sure they're going to there's a lot of stuff we'll probably need to talk about and drop into the show notes. But can you also, before we breeze past it, talk about I know your 2 products that we just mentioned. What's the pricing on those? So if people wanted to jump and say, hey, John, like, dude, this is exactly what I need. I'm like XYZ further all the way through. I want plug and play. What are they going to expect for revenue?
So the one that I was talking about there, where we predict the potential revenue and what you'd have to do to maximize your revenue, that's $500 a property, right? And it's a brand new product someone just putting together. This episode is going to be out for a long time, so that might change. Let's just put that out there, right? Now, the other thing that I provide is what I refer to as a profit map, where you can get all the raw data sorted, clean it, or organized, and be able to go through any market very, very quickly, right? The interesting thing is that within about a week or 2, I will have the ability to offer almost every single location across the entire United States for like a fraction of what I was offering before, because I've built out a program that allows them to be instantly built for any location. All you literally have to do is type in a market. Whereas before, you'd have to reach out to me, I'd have to build it, I'd put it all together, to clean it, sort, organize it, and then deliver it to you. Now I have a software that automatically does it, and I'm planning on being able to build a sort of a subscription model that will allow people to be able to grab profit maps from anywhere and be able to navigate any market to figure out which one they want to go into. I don't have the pricing set on that yet, so I'm not going to say a number, but I'm in the works of figuring that one out.
Awesome. Something to look forward to. I think we will definitely use that. So thanks.
I could be a case study for the property I just bought in Tampa, because I have a management company that's telling me, based on I think he manages 17 properties, based on what he manages and what he thinks it can drive. And I trust him. Like, he's shown me the proof and statements and what it's, but to cross-reference and to trust but verify, I definitely want to use your product to see, maybe I'm not doing something. Maybe I need to add something here. And I just went through the renovation and furnishing process. I should be finished in 1 week. So it'll be really cool to see how it kicks off. But it leads me to my next question about markets and specifically. And I've developed an opinion about short-term rentals and the markets that make the most sense, I think, but you're going to know more than me. And really my question is, do you think that the markets that are going to win the most in the future, 23, 24, 25, 26, let's just say, are traditional vacation spots, or do you think you can win anywhere? And the reason why I'm asking is because I'm looking at Atlanta crackdown, typical cities where people travel to, but they're not vacation destinations. Philadelphia's cracking down. Dallas just banned short-term rentals, right? So, and Texas, that kind of surprises me. But then I think about it like, well, Dallas is not really like a vacation destination, and that's not like where a lot of their tourism and hospitality isn't based on short-term rentals. So I could see why they would do that. Whereas a lot of the Florida markets, like, people are traveling there, and they've been traveling there well before Airbnb. So that's why one of the decisions I made to go into the Florida market. What are your thoughts on that? I know I threw a lot at you, but it's important.
I know exactly what you're saying. Great question, by the way. I have not been asked that by anybody. But before I can answer it, define what you mean by win.
Good question.
Yeah.
So I don't know what that is, but I put it to you this way. We know people that got involved in 2019, 2020, 21. I don't think those numbers are really feasible, especially 2021. I don't think those numbers are going to feasible. Like, I know people that were making legitimately cash flowing $80,000 a year on one property. Now, if you buy a mansion, you make it work, events, whatever, you could probably do that. But I guess my question is, can you see $1,000 to $3,000 a month in cash flow on properties, maybe 25% cash on cash return, like that you could see? That's not outrageous, but still extremely good. And that question kind of like, do what you want with that information, but hopefully I gave you something to work with.
Yeah, that actually, as you were explaining all that, it helped me kind of figure out exactly what my opinion would be on this. I'll kind of explain the way I would define winning, right? Because like there's a part where you can get cash flow, but then there's also the equity side of it and the long-term play of the real estate, which honestly is probably going to be where you make more of your money. But the cash flow, yeah, go ahead.
No, I don't, not to cut you off, but the reason that it's such a great point, and the reason why I asked the question is because when we were talking beforehand, I was mentioning about how I bought a property in Tampa, and the reason, and the short-term rental play for me from a cash flow standpoint is to never lose the property. I don't care if I break even. Like, and I think I'm going to make money. I have an underwriting that's telling me that I am. But if I break even, I have a property in an ascending market that's going to be great in 10 years with new builds around it. So again, it does depend on your criteria and what people are getting into it for. But I would imagine most people are looking to cash flow on short-term rentals. So, take that information as you will.
Yeah. So, I mean, you can without a doubt still find properties that are cash flow between 1,000 to 3,000. I literally was underwriting a property today that it was like 26,000 to 34,000, depending on how well it did. Right.
Yeah, so, that's right in those numbers. Yep.
Yeah, exactly. Like that would be the cash flow on it. Now, honestly, like to me, I think that the best markets are going to be the ones that are not well-established vacation markets yet, or they are well-established, like they are vacation markets. They're not well built out, right? Like a lot of the competition, a lot of the other Airbnbs are really bad. Like they're really bad listings. They're not well designed. They're not well put together. Your competition's kind of a joke, right? However, there are still people that are going to that market, and there's an underserved need for an Airbnb that people actually feel comfortable booking, right? Because there's some markets that you go to where every single last Airbnb is shot on an iPhone still to this day. And imagine if you're booking that, right? Imagine like booking an Airbnb in Scottsdale. They're like beautiful, well put together. You know, you're getting the best quality ever. And then you go to this other market and you're like, I can't even trust any of these Airbnbs that I'm about to book, right? But then all of a sudden there's just one in that market that is beautifully done, really beautiful, in a nice Airbnb. That one's going to get booked over all of them always, right? And always for quite a bit more because people feel so much more comfortable buying that one. And so my take on this is that the sort of best opportunity market's going to be the ones that are smaller vacation markets that are still being established. And if you can enter into those markets and provide a higher quality service in Airbnb comparison to everybody else, you will be able to get outsized returns due to that. And then as the market continues to mature, your property will continue to get a higher gain in comparison to some other markets.
So it's interesting. I'm kind of feeling like you're talking about the Poconos in and around, because we're finding that the competition is not, it's not insane. Like I look at some of the listings out in Scottsdale, right? Or in some of the warmer climates, and they're just unbelievable.
We could compete in Scottsdale.
You could. And so that's just one example. But how would you recommend someone finds one of these like emerging, like upcoming markets that they still have competition in? I know there's a lot within that, and there's probably things you can and cannot say under the guise of the company. But I'm just thinking, like, as people go through this, they might think of like, hey, well, this place, an hour drive from me is pretty amazing, and I don't see any crazy listings out there. But then just to kind of like identify in that market to see if it would be profitable or not, or if it's a waste of time.
So I know the answer to it, but what I'm going to say is it's not what we typically do. So with Techvestor, we don't take the risk that I'm about to explain right now. And I also haven't taken the risk myself. So I'm not sitting here saying like it's foolproof, but this is this sort of logic and strategy of the way I'd be looking at it. Just need to put that disclaimer out there. What I'd be looking for is markets that probably met like the 15% rule, but with shitty listings, right? And so you're still seeing demand that's within that market, but all of the listings look really, really bad. And then but the home values are still decent. Like I was looking at a market this week where that was the exact case. They were kind of like around this sort of 12 to 15% rule, but I knew for a fact that if we put together a significantly better listing, that we would be able to bump that revenue up. The issue is you don't know how much you can bump it up, right? Because you can only bump it up so much. You can't go from 100 to 300, right? You can maybe go from 100 to 120 fairly easily and comfortable. And so it's like, well, is 120 meet the 20% rule and give you the cash flow that you're looking for, right? And then anything above and beyond that is just, it's pure profit, right? So it's like, so I guess what I'm trying to say is that, with Techvestor, we always go into markets that we're very confident on, that we have a lot of proven data that when we enter into it, we know exactly what we're going to make. We don't take that kind of a risk because we're using everybody else's money and we're stewards of that money, right? So we're very careful with it. We don't take risks we don't need to take. Whereas somebody who's a little bit more risk adverse and is willing to take that leap of faith and believe in themselves, right? Then that would be the type of market that you'd be wanting to look into.
That's great. Yeah. No, I think that's perfect. In the market question, I'm wondering, like, what do you see with regulations? Maybe you're ahead of the curve. Maybe you can or can't say, whatever, you tell us. But I'm saying, basically, like, I was looking at what happened in Dallas, and they just left so many Airbnb hosts out to dry. And yeah, really brutal. For me, I underwrote the property that I bought with the midterm fallback, right? Based on it being close to a hospital. Now, you know, it won't do nearly as much money, but I won't lose it, right? So midterm fallback, near close to a hospital, close to a university, the option's there. It's not like that in every market. I'm wondering what you think the regulations are. Do you see something sweeping the nation, or do you think it's very selective?
I think it's super selective.
I think so too, and I'm so glad you said that. And because
it's just the way that the country is ran, right? So that's sort of step one. That's the way the country is ran. I guess not step two, but this has been going on since Airbnb launched. It's just very, very slow the way that it's been going. If you were in San Francisco when, you know, Airbnb was first launched and then they started running into these issues and trying to ban Airbnb, you would be feeling the exact same way that people are feeling in Dallas. And that was like, I don't know, like 8 years ago, maybe even longer than that, right? And when I was getting into Chicago in 2018, it was the exact same thing. Chicago had already passed regulations. All these other places were passing regulations. I was in this sort of spot where you're so concerned about it. You're like, is this going to happen? What's going to happen? And what I think we're seeing is that there is a need for regulations in certain locations due to the housing crisis that all of North America is feeling. And it is understandable because a lot of people are ending up on the streets and they just need to do something about the supply, right? However, if Airbnb was wiped out tomorrow, people would lose their minds because people love Airbnb. Imagine if you couldn't book an Airbnb or VRBO or anything, people love them. So there's still a need for them in some sort of way or fashion, right? And so the way I see it is, what's happening is that they're putting in regulations, but in most places they're not outright banning them across the board. They're just putting in regulations that sort of allow them to some people to still operate, but other people to not, right? Whereas in some markets at first, so like San Francisco got completely banned right off the bat, but Chicago, they put in regulations that allowed people to kind of still Airbnb, right? Then what we started seeing is like statewide regulation where they're like, no, everybody can Airbnb, it's totally fine. And then we started seeing, I can't remember the name. There's a couple of places that have done this before already, where like Detroit, as an example, they put in regulations and it was so bad and there was so much backlash that they revoked those regulations, right? And so what I think will happen is you're going to get sort of like a plateau effect of, these are the regulations for the city. This is what it is. This is how we regulate them. We're not going to continue to keep changing them. Like, it is what it is, right? And then in some places, you're going to see them reverse, right? But I think every major city is going to have some sort of regulations around them, just like they have regulations over literally everything else, right? And if you want to study or get like a good feel for what regulations look like, Florida has had regulations for decades upon decades because they've been a place where people have been renting out homes forever. So if you want to get a feel of what the future of the rest of the country look like, look at Florida. That's my opinion.
Florida has led the way in a lot of things, and I kind of respect the way some of the things are run down there. It's kind of more freedom for people to make decisions. So I like it. But yeah, I'm glad you brought that up.
So we touched on two things there, and it was there's like three things that you need to consider before buying an Airbnb, and I think you talk about this. It's regulations, then the data, but then there's also competitive advantage. And I want to talk about competitive advantage, and then also kind of weave that into amenities, because I think for me, when I think of competitive advantage, it's like, okay, what can I do as a host or our company do to set ourselves apart? And we provide incredible hospitality, right? We reply to any inquiry within under 3 minutes. But then that's like the hospitality side, right? Then cleaning's immaculate. But I'm thinking more so on the amenity side, right? And obviously it's market dependent. Can you talk to some of the coolest amenities that you've seen in certain properties, and then also how to gauge which amenities would fit for your property and your market? And we may have touched on that before, but I just want to I'm trying to think of, are we missing anything for our market?
Yeah. So I'm actually going to do your questions backwards. So I'm going to talk about like how to identify what amenity, and then we can talk about like the fun stuff.
Perfect.
Yeah. So there's, in my opinion, there's two different types of amenities that you need. There's the ones that you absolutely need, and then there's the competitive advantage ones. Okay. And I literally think of these ones that are like you absolutely need the exact same as a bedroom and a bathroom. So when you're like, as an example, Poconos, which you guys have a ton of places at, you have to have a hot tub to be able to hit a certain revenue number. You have to have a fire pit to be able to hit a certain revenue number. If you do not have those two amenities, you're not going to be able to compete with the person next door. And the reason being, and the way that we think about this is that if everybody has it, you have to have it to be competitive, right? The best example of this really is a pool heater. Okay. So Matt, like in Scottsdale, actually everywhere, you need a pool heater in your pool. Because imagine if you're a guest going to book a home and you're comparing two homes side by side, but one offers a pool heater and one doesn't. Every single time you're going to book the one with the pool heater, every single time, guaranteed, especially if they're the exact same price. You're probably paying a little bit of a premium for the one with the pool heater, right? And so that is a must-have amenity. You can't not have that amenity, right? And that it's, once again, very easy to understand when you think about the pool heater. However, that applies to a ton of other amenities, but they're all specific to your market. So
let's talk.
I'm literally looking on my phone, like, what does it cost to put in a pool heater? I'm trying to figure that out because I don't know if my property has one or not. But
so it's funny. I was literally going to ask you. I was going to say the guy who was giving you the property manager who was giving you the number. I was going to say, do you have a pool? And if so, do you have a pool heater?
I have a pool, which was, they were like, don't buy a property unless it has a pool. Like, don't even do it, right? So I have a pool, don't have a pool heater, but buying a hot tub for the, October, November, December, January. But I haven't bought it yet. But I think a pool heater would probably be worth it too. So it's I just looking at how much it costs. I don't think ours does. So, yeah.
I'll say this. A pool heater will be a way better investment than a hot tub, especially in Florida market, because I know the Florida market, and like barely anybody has a hot tub. So the way I kind of think about this is that and I just did a whole presentation on this. You want to be able to take all the data for your market, right? And then you're gonna review all the good data for the homes that you're competing up against. And what you're gonna do is you're gonna make notes on all the different amenities that all of your competition has. And so you're getting really granular, but this is how you figure out how to make that extra $10,000, $20,000, $30,000, right? And what you're doing is you're checking off like, hey, this person has a hot tub, they have a pool table, they have a foosball table, they have an entire game room with all these things they have, and you just keep going, right? Like they have there's one market where you have to have high ceilings to be a top property. For whatever reason, that sort of cathedral ceiling look, every single top property has it. It's not something that you can buy and put into your property, but before you buy a property, you want to make sure you have that, right? And so you want to get really granular with it. And then what you're going to do is you're going to see how many people have that amenity. So as an example, if there are 20 people and 15 of them have it, you have to have that amenity to be competitive. Just like the idea, like a pool. It's the easiest, most simple example. They all have a pool. Great. Well, what if everybody has a game room? Do you have a game room? More importantly, do you have the room in your house to add a game room, right? That's another one people miss all the time. They go to buy a property, doesn't have a second or third living room, and they can't add in the game room to be able to compete. And there's 15 Airbnbs with strong game rooms, and now you don't have one, right? You're now at the bottom of the pack. And then on top of that, say it's like, say there's only 10 out of the 20 have a hot tub. Now, how do you decide, right? Well, is it the top 10? How many of the top 10 have hot tubs in comparison to the bottom 10? And then that's also going to help you understand, right? And so by going into this really granular data and keeping track of it in that sort of way, it makes it really easy to understand, like, I need to have a hot tub and a fire pit in the Poconos to be able to hit the revenue targets that are going to allow me to be booked, right? It's crazy to me, one, that people don't understand that, but two, how much of an effect these amenities actually have. Because a quick story, in one of our markets, we didn't have a hot tub and a putting green. We didn't have those two things. We had one home that just wouldn't get booked for like a solid month and a half, 2 months. It already had some pre-booking, so we weren't too worried about it. We were trying to figure out, like, what could we do? And this is where this whole logic and theory came from, where I looked at all the data and realized, okay, we don't have a hot tub, we don't have a putting green. Let's add both of those in there. They're going to cost us almost $20,000 to do it, but let's get it in there, right? Got it in there. Instantly, bookings started coming through. Property was no longer a property that we were worried about moving forward. simply because we added those two things in there. That made us completely competitive with everybody else that people were looking at homes for. So it was night and day is what I'm trying to say. And that's why we say it's as important as the bedrooms and bathrooms.
I'm thinking about this a lot too. So we have, it's interesting. And I think the style of the property too, I'm specifically thinking about our market in the Poconos. There's so many different types of houses. Like we have a ranch, but then there's cabins, there's A-frames, et cetera. Right. And like, can a game room be applicable to an A-frame, for example? I know a hot tub would, I know a fire pit would. We have a great hot tub. We have kind of a rinky-dinky fire pit. It's okay. Immediately I'm thinking, okay, we need to finish the fire pit. Then I'm thinking there's a lot of game rooms out there. We have an arcade room, a standstill, and it's in our photos. It's great, right? Someone might book it from there, but it's not the best thing when you actually play it. So we have a garage that no one parks in. And we originally bought the property. We're like, dude, we can make this into a badass like movie theater game room. And I'm thinking, we'll probably go through your data and your products and see if this makes sense, right? But it's going to cost us a lot out of pocket, right? Probably 20 grand to finish that. But if it's going to bring us 30 grand a year, it's worth it.
Well, okay. So here's the better part about that. Does that property cash flow?
Yes.
It does. It does. We've only had it for 6 months.
We've had it for 6 months. It did not for the first 4 or 5 this summer. It is. Yeah.
Okay. Will it cash flow over the full year? Like, will you at least break even? Let's put it that way.
Yes.
Okay. The way that I think about this, let's say you break even. Hypothetically, you guys get it to the point where you break even.
Yep.
The $20,000 that you would make from having, let's say, that game room, it would be almost all pure profit, because all you've done is add an additional amenity that makes your property worth more, which allows you to increase your average nightly rate, right? You're not paying more in utilities. You're not paying more in cleaning. You're not paying more in mortgage. Everything stays the same. You have a set amount of expenses. And so as you make that additional $20,000, it's almost all pure profit. So if it costs you $20,000 to actually put in the game room, you'll make $20,000 of almost all pure profit. And that makes it a 100% return on your money if that were to be the exact scenario, right?
And that's only in 1 year, right? So think about, you can just keep, it's however long you keep the property. And don't forget about when you sell the property, you have this big ass game room that people are like, oh, it's
they can convert it back into a bedroom or whatever they want to do.
Or they keep it like that and they say, wow, this will set us apart from all the others. There's options, right?
Yeah. But people that are listening, like John, this makes so much sense. And actually, there's a lot of people that are complaining about Airbnb, and it's like, oh man, it's not what it used to be. It's so hard to get in. It's like, I think we enjoy it being like that, because it's going to separate the people that are like in it to win it and are not. You can't just throw your property up anymore with iPhone photos and win. Like, they have to showcase what your property, why you should go there versus somebody else. And I think your products are perfectly aligned with what people need to separate themselves. If they're willing to spend the money and $500, like, why wouldn't you on the one product to be able to win infinitely in your returns? So it's great.
A couple more here too. And I did, as I mentioned, I did some research on your background and obviously like data driving here. But I was big on, when we were asked to join this company, I saw a lot of the properties and I just saw the listings, right? And the properties were good, but the photos were horrible. And not every property, but for a good majority of them. And for me, I view the photos as the window into the business, not just that one property, but like in general, who's managing the property. And then it goes from the photos to the description and to like just the journey that a potential guest goes through before they actually click, yes, I want to stay with you. So, I do have a couple more on amenities, but I want to talk to the importance of photos, right? I saw a post you did the other day, and there was 2 identical properties, and one photo had a kitchen that just looked slightly better than the other one, but the photo was perfect. And I think they drove maybe like $20,000 more annually purely based on the photos. Can you talk to just maybe that example, that if it's fresh in your mind, and then also how important photos are to actually showcase property?
100%. So photos are outrageously important. It's $11,000 more was the amount that the other listing was making. And it was literally like identical homes. Everything was the same, but even the same host, the same management strategy, all that stuff. But the one just didn't have it didn't have good photos. Like, the photos were crooked. They were on an angle. Like, for whatever reason, this guy didn't get good photos. But to me, that was the best piece of data I've literally ever seen to be able to prove that photos make a difference, because 2 identical homes ran by the exact same person. One makes $11,000 more, right? Simply because it has beautiful, beautiful photos. What people need to understand is that your photos build trust for your guest to pay you, right? And so they if you have beautiful photos that showcase the home perfectly and walk them through it and make them understand exactly what they're going to be getting, they're going to feel so much better about giving you their money because they trust what they're about to get. They can see exactly what they're going to get, and they know that it's going to be a good experience that they can rely on, right? That's true for every business ever that showcases anything, right? You have to have these good photos that actually show off whatever you're providing. And I think that's just that logic there, that it's a business and you're providing an offering to somebody, a product or a service, whatever it is. You have to showcase it and you have to build trust, and the photos do that the best out of anything in your listing. So important, outrageously important to have proper photos, good photos.
Thanks for confirming that, because it kind of bugs me when I see these properties that are awesome, right? And they're just not showcased right away. It goes back to marketing 101, and just obviously some people, they don't understand how important it is, and they just want the quick, hey, let me just get this up and start trying to drive dollars, right? Just take an iPhone photo, and it's mostly competition you see doing it. So I'm not too bummed about that. Yeah. But also then you can showcase, back to the amenities, how amazing your offerings are compared to others. I want to talk about potentially some of the coolest amenities you've seen in properties, and this is more so just the fun part. I saw you talk about a guy that added a lazy river to his property and drives almost like $750,000 a year. Obviously, it's a mansion, right? But talk to what's out there.
Well, I mean, like, that one's cool. That one's one of the coolest ones, without a doubt. Like, lazy river in his backyard, absolutely beautiful, super cool. One that I love and I've been pushing Techvestor to get it in like every single one of their properties is pickleball. And the funny thing is, I had never played pickleball, but I kept saying like, we need to add this into our properties, and we just weren't doing it. And then all of Techvestor had a little offsite. We got together, and the backyard of the Airbnb we stayed at had a pickleball court. And we literally for 3 days straight played pickleball with nobody having experience other than one guy. And that's why it's one of the best amenities, because you really don't need to be that good at pickleball to have a fun time playing pickleball. Whereas like tennis, you have to know how to play tennis to be good at tennis. Basketball, you have to know how to be good at basketball to play basketball-ish. You know what I mean? But pickleball is so easy, and you can play with like 4 people at a time, that it's very communal, and they're quick games, and everyone just like can get really competitive with it. So that's why I think pickleball is like one of those super cool amenities that should be out there nowadays.
That's very niche, yeah. And it's cool. Well, I wouldn't say super niche, but my in-laws, by the way, are obsessed with pickleball, and they've made me play. Trust me, I've played my fair share of pickleball games. We are minority owners in a big 43-unit resort up in the Poconos. And actually, one of JD, who runs the show up there, he's like, dude, we're adding a pickleball court. And so at first I wasn't I'm like, oh, like, why wouldn't you just do tennis? And there's also a golf course nearby. There's things to do, right? But that is kind of exciting to hear you say that, and it's showing that it's driving dollars in certain properties.
So it's funny that you say your in-laws are the ones that got you into it. And the reason why I say we needed to have it before I had even played it was because my parents, who are 65, love playing pickleball, and they haven't played a sport as long as I've known them. You know what I mean? And
sure. Yeah.
They're not athletic people. They love playing pickleball. And so in my head, I'm like, well, if my parents can play this and have a good time, anybody who has zero experience can have a good time playing this, right?
Yeah.
And you're appealing to the older crowd and the younger crowd at the exact same time. It doesn't have to be one demographic, right?
That's what I actually really like, because if you think about it, you're for like a family, right? Or someone that's gonna maybe older adults can play it, kids can play it, and it's any age, our age, like mid-30s or 28, whatever. Every single person can play it, and it's not only for, even if someone comes up on business, right? Like that's what you guys are doing, and you just went out there and hit it out. So yeah. It's funny that you mention it. It kind of has been like an upcoming sport that's been sweeping the nation, which is interesting. It's I would say last like 10 years, but that's a cool, fun one to mention. Any other ones? I know like in Florida, when we were redoing the data, this was 2 years ago, but in Orlando, they have theme rooms. I was seeing Star Wars, Lion King, like, whatever the newest Universal film was. There's a lot of Avengers things out there. That's very specific to that market. So maybe the question's a little too broad, because I assume it just goes market by market, like what hits the most.
Yeah, I mean, that is the case. It's really like what hits the most within all these different markets. It's hard to say like one specific amenity that's just like so unique and so different, because there are people that do unique things. So like outdoor movie theaters, I think are really cool, because you can you get like a projector under a pergola, and you've got like really comfortable seats and hanging lights, and it creates this really cool vibe that people will enjoy. People put up like tree houses sort of in the back corner be and create it more so for kids, right? And that makes it like a unique amenity that not a lot of people are going to have. But it is really what I love actually is just seeing people very strategically put in amenities that are best for that guest demographic. So as an example, golfing market, everything about the home is surrounded around golf, right? And you see these people. The reason I love it is because I see the data. I know exactly how much they're making, and I just see them make so much more money than everybody else. And I love that effort being rewarded.
Last thing I have on this, and it's interesting because I said this when we first started this undertaking, and we haven't found the exact thing that makes it pop. But what I'm seeing in every market doesn't matter the market. It's not only it's not an amenity, but it's an Instagrammable moment. And I know that's kind of nerdy to say, but like, dude, I'm telling you, the properties that seem to kill have something in there where people can take a photo, whether you take it to Tennessee and they have the big angel wings, right? People, I think Elefante has, I know you mentioned him in one of your posts, but like, I'm pretty sure he does a mural in every single one of his properties that people can take photos of. I see grass walls with a stupid neon light, but people friggin' love it. I don't care if you're a kid, you're, I don't know, every age pretty much. We're like, oh, you can go take a photo and then, tag us on Instagram. For us, I'm like, I was telling JD, I'm like, dude, we got to get the green grass walls and the neon things, but I don't know if it applies to the Poconos. So my question, it's a multifaceted question. Do things like that apply to every market? Can you get something that applies to every market? And what are your thoughts on Instagrammable moments for driving business?
Okay, so I actually wouldn't think of it as an Instagrammable moment, but more of a money shot. I think, so I know what you're saying, where like people they have the murals and they can take that photo and then they can post it within the actual.
Yeah.
But what I think is probably more important and what does apply to every single market is having a money shot. So one photo or one setup or whatever it may be that is just so eye-catching that when people are going through all the different Airbnbs that they can book, they see that one and they're like, ooh, I want to check that listing out, right? Because it's more eyeballs on those listings. So like with Techvestor, we talked to Airbnb, and Airbnb gives us some insight into like how our portfolio is doing. And they're like, you guys get clicked on way more than anybody else, like way more. They didn't give us exact numbers, but so people are checking out our listings way more, which means we have more eyes, more opportunity, more all of that, right? Because we have a lot of these photos that are super engaging that you just want to see the property a little bit more because it's so much cooler than everybody else's. So a photo, like setting up the listing to try and get one photo that is like the coolest part about that listing, whatever it may be, but it also looks really cool. Like we have some of our most competitive markets, we do these like beautiful backyards, and the photo that works and gets people to click is a photo of the pool table with the mural behind it. For whatever reason, that's the one that gets them, right?
Dude, it's so funny that you mentioned that. We have a gentleman that we're good friends with. He just bought a property up there, and he has, and I'm a big graphic or whatever, how do you say it? Like marketing guy, right? And I just noticed things. He put the grass wall up, and it says like, welcome to the mountains. And it's a pool table with that in the background, and it hits, dude. He's already driving. We were talking to him today, and he was talking about how his weeks are fully booked. Just the weekends haven't booked yet. I'm like, dude, that's the best part you could possibly be in, dude. We just maybe have to drop down the dollars a little bit on the weekends, because usually the weeks are the hardest. But his main photo is that exact thing that you said. It's got the grass background, welcome to the mountains, neon flashy, and the stupid pool table and a bar. But it looks amazing.
Yep. And that gets people to click, and that gets people to actually want to potentially check out your home. Now it's in one of their options that they might potentially book. If it falls within their price range, then they'll go for it, right? Yeah. But if it's out of their price range, it is what it is. They just got to take a look at a nice listing that they might eventually book. But yeah, man, that money shot is so important, and like strategically setting up your home to get that shot is also really important.
Very cool. You mentioned tree houses. This is interesting. I was just going to ask you about this in general because I might be giving too much information away, but we have some land up on the resort that we've been debating potentially putting in like luxury tree houses in. So, and that's just on top of 43 other units that some are Airbnb, some are long-term. It's super, I guess, niche, or if you will. It's like very, very unique, right? So there's a tab, I'm looking up on Airbnb, right? It shows you all the unique experiences today, how they updated their app, and one is tree houses. What are your thoughts on those? Have you ever stayed in one? And do you think it's something that could potentially be a high revenue earner for like the long term, not specifically just for like a short period of time while it's cool?
No, I definitely think it has long-term potential. I definitely think it does. It's not going to be an equity play, right? So, anyone who, that's the one thing that people are always like saying the worst part about treehouse is that you can't build any equity, is what it is, right? That's what you're going for. You're going for cash flow.
Mhm.
I think that they, without a doubt, can be a great investment if you do them right now. Here's what I mean by that. We're talking about amenities, and yes, you could have a nice, beautiful, luxury looking treehouse that's tucked away nicely in this little area that you're at. But if you don't offer amenities with that, people don't want it nearly as much as they want it with the amenities that are right around there. So what do I mean by that? Like having a wood barrel burning hot tub would go amazing with a wood treehouse that was secluded. And then you also have a little nice fire pit with the hanging lights and some other few amenities around it. Now, the reason I'm stressing this is because in Waco, Texas, there's two unique Airbnbs that are not far away from each other. One is a container and one is like this beautiful Alpine 2-bedroom A-frame, right?
Cool.
Now, the Alpine A-frame is nicer, newer, a little bit more luxurious. So naturally it's going to make a little bit more because of that reason, right? However, the container home is super unique and it has a little rooftop patio up top. However, there's zero amenities around it. There's nothing. They don't even take photos of the top of the container. It's designed really well, but they don't show anything else off other than that, right? But then when you get over to the Alpine A-frame, you've got a hot tub, a community pool, a lake, a deck, a fire pit, and like a variety of other things as well that you can get with that listing. And the price difference, the container makes maybe $30,000 a year, and the other ones are making somewhere between like 120 and 150, right?
Wow.
They pretty well sleep two guests. Like two guests stay at both of them, right? So if you're going to do it, study the amenities. I have a video on my YouTube that talks about unique stays and how to analyze that data. Take a look at it before you go and actually do it, and you can see that there is without a doubt, a premium for doing it. So
Very cool. Thanks for the walkthrough and all the data. That was very, very helpful. And I think a lot of people, I know for us, we're definitely going to use both of your tools. Might wait a couple of weeks till we get the full market scope, but looking forward to it.
Yeah, it sounds like the products that you offer are perfect for what we're looking for, and I don't see why people wouldn't want to jump in and use them to separate themselves in the game. But do you have any last piece of advice for somebody who's maybe in 2023 looking to get in, maybe leave our audience with one thing that could maybe help them on their journey if they're getting into short-term rentals?
Yeah, so I have 3 free courses all about Airbnb data on YouTube, right? If you're trying to get into this, data is extraordinarily important, as you've understood if you've stuck around all the way to now. I have courses that teach you exactly how to do it. So look at my name, you'll find me on YouTube, and go to my Profit Map Masterclass 2.0. That's going to be the best data training that you possibly get. And it's going to teach you everything you need to know to be able to make sure that the property you're going to get is going to be profitable, right? And then if you need that professional opinion, you can reach back out to me. We can set that up. But you can do most of the work just by going onto YouTube and learning yourself.
Love it. John, it was a pleasure having you on the show, man. Thank you so much for that. We are definitely going to be pointing people your way. I know for us, my gears are turning heavily. So we also got to bring JD into the mix here, and I'm sure we can have you kind of dissect our business a little bit here and all the properties we have. But it was a blast, man. You're a wealth of knowledge, and thanks so much for coming on the show.
Thank you, man. This was awesome. This is a fun interview. I'm full of energy, so that's why I know it's awesome. So well done.
It means a lot. All right. Thanks so much, man.
Thanks for tuning in this week to the Weekly Juice Podcast. If you liked what you heard, please leave us a 5-star review on Apple Podcasts, subscribe, and share with friends. The more ratings we get, the more ears we'll get on our show, and in turn, we'll be able to provide you with more high-quality guests. You can also find us on Instagram at Weekly Juice Pod, where we post daily tips and tricks and document our own journey towards financial freedom. Make sure to tune in every Wednesday to get your weekly juice.